Hey there, welcome to Wyckoff technical analysis session for Avalanche. So Avalanche has a week of drop, but then it's still within the uptrend support line. It's still staying above it. So let's see where is it heading, and is the distribution cycle still going to happen? So we're looking at the weekly chart of AVAX, and this red candle we have this week, even though it has gone below the yellow key level of $29.30, it found support above this upward trend line, this dashed white line. I actually have to adjust this a little because it doesn't cover the wick for the candle in the first week of September. So it's still far from this support line, and when we look at the previous distribution cycles, these periods with five consecutive candles going up, and these with four, did not have much of a fluctuation in between. But then this time it seems to be a little bit different. While this seems to be the backup and last point of support, which is pretty common to see some form of horizontal or even slightly downward action, like these and these. This time above the sign of strength, look at where above the sign of strength is only here at this point, November 23, 2023, has a little bit of fluctuation before it shot up to the buying climax. So this time, hopefully it's the same. It's like a distribution fluctuation period that it's setting the stage for the price to climb to the new buying climax. Already mentioned previously, this white dashed line here, for those if you're new to the session, this is a declining peak trend line. So when we head to the new buying climax, hopefully the buying climax heads to challenge this blue level of $54.05, and do not stop below this white dashed line. Because if that happens, that means the long-term speculative or investment value of AVAX is declining. So like when people FOMO in, whether they got distracted or maybe there are more options now, more projects now that they can put their money into, they're not going to put as much money as in the past into AVAX. So we witnessed the change from March 2024 to December 2024. This decline from peak to peak, if we look at the top of the wick to the other top of the wick, that's an almost 15% decline. So we definitely don't want to see that happen again for this new cycle. Because if, like for the next 3 weeks, it's climbing to this line, and we measure from that, the wick from the last peak to where it is going, it's another 14 to 15% drop. So it's going to be pretty consistent. If it is recursive for 15% every time a peak happens, in no time the chart of AVAX is going to go flat. So that's not something we want to see. Okay, enough said for the big picture Wyckoff. Let's get to the daily and see what happens. And before that, just quick check on Bollinger Band Keltner squeeze. So previously the squeeze was lasting till the first week of September, and then that's when the squeeze force got released, and we have these 3 weeks of fluctuations. I believe the squeeze force hasn't completely finished yet, so there's still a chance for the price to swing big. When I say swing, it doesn't just go one side. Look at all these swings. It's one leg up and one leg down. So it's just be careful that the swing isn't finished yet, and more will come. And to the daily, just a quick check. The purple lines are definitely coming closer to the orange. It may take a few days for another squeeze to happen. The previous squeeze over this period, the force has kind of been released, and now it's coming together for another squeeze probably in the next few days. And when that happens, this may have a continuation of the current leg heading towards the light blue key level, and hopefully that's the case, because that's how it should head to the distribution cycle, the new buying climax. All these tags, UT up first, that's basically confirmed. There was also a second test right over here. It's pretty flat, but still you see this little bump up over here. And automatic reaction 2, it's kind of tricky because it shouldn't come here. It should be somewhere around here. This long wick down should be the AR2, so that should happen before the second test. And then now it has come down to this level, not exactly the same level as these sign of weaknesses, but still you can consider it a high point sign of weakness, because that's at the level where the automatic reaction was, around the yellow key level of $29.30. So we would expect the price to come down for a sign of weakness somewhere near the orange key level of $22.60, and then maybe there's a chance that it go up for an upwards of the distribution. So if we cross-reference this, if the uptrend is still continuing, that's where it's going to head to. But then there's another chance, okay, let me extend this line, that it trades sideways to get a momentum before it bounces off from this support line and head towards the buying climax. What that implies is it may come down and then accumulate at around the orange key level before it heads up again. So in the daily chart, it's kind of tricky because we have to take into consideration on what's happening in the weekly and then adjust accordingly. The selling volume is in, so this week over here on September 23rd, just a Tuesday, a couple of days ago, this is a pretty strong selling force. You see this long wick at the top. Basically, people are selling and pushing the price back to below the green key level. You see that the body of the candlestick, that the head of the body, basically stopped right below the green key level. I haven't adjusted the line since last or even 2-3 sessions ago, so you know it's not me doing the trick. It's actually the candlestick or the people trading are referring to this level. So now it's trying to reclaim back to above the yellow key level, but then it hasn't been successful so far. It's staying at a level where these candlesticks stopped back in February. So it's not a very strong support level. These levels on these reference points aren't very solid. So it's kind of likely that it has to come down to test this white line over here. That's what it did yesterday. It came all the way back down, but then quite some buying the dip happened and pushes the price back to the current level, but it doesn't find support and got rejected to back to the $28.60 range. So it tried to climb to over $29, but it just doesn't hold. So as of now is the battle between bulls and bears within this narrow range of $28.70 to $29.10. I'm just trying to check whether there's any time points that we can take reference if there's an uptrend. So this box is over, I can move it across and turn it into this uptrend box just to see whether we are heading towards breakout time point. Let's change it to lighter blue. Okay, it's a bit tricky because the up first is just huge. Yeah, that's roughly how it should look like. So essentially what's going on is the price bounces between the bottom, the center line, as well as the top edge or the ceiling of this channel box. So if I draw a line cutting across the BC trading areas, you see what I was referring to. So make sure it's parallel to the bottom and ceiling edges, even though it doesn't necessarily need to cut the box into half. So when I say center line, that's going to line within the two edges, not that is cutting exactly 50% of the box. So this, if I turn it back to the candlestick, you see there are frequent trading activities and like bouncing off the line kind of activities going on. So that's where the center line should sit. And as of this moment, if we look at the box, this point here, somewhere around end of October, if the price continues to trade narrow range between the white line, this bottom edge of the channel box, as well as the yellow key level, by end of October, a breakout has to happen. So either it continues, it breaks above the yellow key level of $29.30 and continues with the uptrend, or it's going to fall outside of the uptrend and then maybe seek support at the sign of weakness level before it rebounds and start a new uptrend. So those are the two scenarios that can play out for the next couple of weeks, 3 to 4 weeks. Remember, again, if you're new to this session, the breakout doesn't happen. Wait till that point to happen. It can happen a week or even earlier. Just that we know we're getting into a narrower range where the price got squeezed. So when that happens, this Bollinger Band Keltner squeeze is going to show us a price squeeze as well. So narrow range trading activities expected, breakout expected before end of October. So that's the narrative for the daily time frame. If you ask, what if the price drops to below the white line? That's the edge of the center line of the long-term playground zone. If that happens, that means we've got an even shorter time frame right before October 7th, before the price even gets to the next time point. If the price comes down to trade within this narrow triangle, it has to either fall out of the uptrend or it bounces up to get or head to the second time point. So that's scenario 3 if it doesn't trade sideways between the yellow and the white line. Oh, and then you ask, how about scenario 4? It bounced up already without even touching the bottom edge of the upper channel box. Yeah, that's still possible. Just that if that's the case, there's still certain time points further down the line around November time that this would happen. But looking at what's happening now, it doesn't seem like it's a possible scenario because it just got kept rejected by this yellow key level. So the likelihood of trading sideways is much higher. So selling force from above the yellow, strong buying force from near the white line. So that's what I read for the past 2 days. So these two candles we have today, yesterday. Back to the big picture. Remember, we're still hoping for a leg up to the buying climax, but remember to set your stop loss. Don't get caught off guard, because this may be a high point for accumulation, but then the accumulation, it can come down to accumulate further, just that it's not likely in my view. So heading towards the PSY is still 75% chance in my view. Coming back down for a subsequent test may be 25%. Not completely zero, so be really careful and trade safe. See you in the next session.